Welcome back to the channel, everyone. Today I want to talk about the massive Wall Street fraud crackdown and how Bill Hwang is only the start. I also want to talk about how some of these large banks and institutions are secretly selling their stocks behind closed doors. So stay tuned and let's make some money. And now I want to dive straight in with the key information. So, Unusual Whales tweeted saying that US investigators are mapping out a crackdown on Wall Street. Bill Hwang was just the start, per Bloomberg. So this takes us to a new Bloomberg article saying that Wall Street isn't ready for the crackdown coming its way. It says federal investigations into questionable trading practices are on the rise, and the fate of Bill Hwang and his firm Archegos may await others in the finance industry. Okay, what this article is saying is that there will be other hedge funds that end up going bankrupt and being liquidated, and there will be other hedge fund managers that end up in jail. It says Bill Hwang's lawyers couldn't believe it. The fallen billionaire investor was sitting in federal custody in Manhattan less than 48 hours after his legal team had visited prosecutors to talk them out of criminal charges. The effort seemed to be going well until the Fed scooped up Hwang at daybreak on April 27th to face 11 felony charges and potentially the rest of his life in prison. These investigators don't just want some civil charges and a small penalty to be paid, they've racked up a potential 380-year prison sentence. And it says all of Wall Street should pay close attention. The Hwang case marks an upswing of federal investigations into a slew of suspected trading abuses. And the article even says that 3 other broad inquiries have emerged in recent months to examine so-called block trades, short sales, and well-timed wagers. It says they all centre on the same question, which is, are the markets rigged? Now, I think it's brilliant that these federal investigators are putting short sales and well-timed wagers into the same basket of market abuse that Bill Hwang was committing. Okay, we will see some abusive short-selling firms being liquidated and going bankrupt, and abusive short-selling hedge fund managers being thrown in jail. Biden administration officials have spent the past year laying groundwork to pursue white-collar crime more aggressively, rolling out policy changes, some disclosed and some not, that will make probes easier to start, faster to finish, and more punishing. Now that paragraph or that sentence sounds absolutely brilliant, and absolutely brilliant for the AMC squeeze scenario. It's saying that we are seeing undisclosed policy changes to make investigations and arrests even easier and even faster and even more punishing for those abusive short sellers. The US DOJ has quietly ratcheted up pressure on big banks to look for market abuses and then turn in staff and clients. And there's growing willingness among prosecutors to use tough federal laws against Wall Streeters that were designed to target gangsters. Now, obviously, this is hinting at that RICO or racketeering investigation, which is surrounding the entire short-selling community. It does also say that the SEC is seeking larger civil penalties, which obviously we don't really care about because A, the SEC doesn't do their job, and B, those civil penalties will be too small anyway, even if they're larger. But positively, it does say that senior leaders at the agency have stopped accepting ad nauseum meetings with defense attorneys looking to talk their clients out of trouble. Obviously, not too long ago, a defense attorney for a hedge fund or a large bank could come along to the SEC and say, "Hey SEC, please don't investigate my hedge fund client, just walk away." And seemingly the SEC absolutely did just that. Obviously, it's not good that the SEC did just walk away from potential criminal investigations, but I guess it is a positive change that senior leaders have now stopped doing that. Gerber, the head of the SEC's enforcement division, said there's a perception that there are 2 sets of rules, which obviously there's that perception because there absolutely is 2 sets of rules. He said, "We want everyday Americans to have confidence when they invest in the markets. They should have confidence knowing there's a dedicated group of professionals to deal with new threats, traditional frauds, and making sure that their retirement money is safe." Now, obviously, everyday Americans should have confidence knowing there is a professional enforcement division that does not make 2 separate books of rules. That is what's going on at the moment, so hopefully Gerber does make some changes. So far, this article does seem like changes have been made or changes are being made, especially with the Bill Hwang arrest. I would just like to see more arrests being made in the future. Now, I think one of the most important paragraphs in this entire article is where it says that Deputy Attorney General Lisa Monaco commended Manhattan investigators on the speed of their 13-month investigation, which is unusually fast for Wall Street, where targets often have the best lawyers money can buy. She said this is exactly the kind of criminal case that the DOJ should prioritise, and she then dropped a hint by saying the DOJ will continue to do so. And importantly, it says behind the scenes, the feds have been gathering information on dozens of banks, investment firms, and their executives as part of other sweeping probes. Now, I also want to talk about how banks and large institutions are secretly selling off their stocks. And guys, if you didn't already know, you can currently get 5 free stocks worth up to $3,500 each and a free share of Twitter on top of that when you sign up to Moomoo using the link in the description below and make your first deposit. And on top of that, Moomoo and Futu have also officially announced that Futu does not accept payment for order flow, and therefore you don't have to worry about your trades going through sketchy dark pools or being given to sketchy market makers like Citadel. Moomoo also recently won the award for being the best trading platform at the FinTech Breakthrough Awards. Moomoo is very easy to use, it's incredibly customizable, and it will help you to trade like a pro. Moomoo has tons of technical indicators and advanced charting tools. Moomoo publishes daily short selling data, position cost distribution, and much, much more. So guys, be sure to sign up to Moomoo using the link in the description below to get up to $17,500 in free stocks and a free share of Twitter on top of that. As the Maverick tweeted saying the flash crash overnight in Europe is a source for concern. He said a major market participant liquidated billions of dollars worth of assets. This was obviously partially covered up by market regulators saying they saw no reason as to why stock prices fell. But obviously it's because a large market participant, aka Citibank, liquidated billions of dollars worth of assets all at once. Obviously over the last few weeks and the last few months we've seen the total market capitalization of the US stock market falling from over $120 trillion down to around $107 trillion. Over $13 trillion has been wiped out of the stock market in the last few weeks and months since those December highs. And as investing.com reports, the US equity funds have posted a third weekly outflow. So it's not just the prices of stocks crashing, but it's also these large investment funds and banks withdrawing money from the stock market and just holding more cash. These large institutions are withdrawing money from ETFs, they're withdrawing money from tracker funds, from mutual funds, and just directly out of the stocks and holding more cash. It says US equity funds witnessed a third weekly outflow in the week to April 27th as investors worried about slowing global growth and more aggressive Federal Reserve. US investors exited equity funds worth a net $10.5 billion in that singular week. And that was also 34% lower than the previous week's outflow as well. And that's just $10.5 billion being withdrawn from equity funds, not being withdrawn from the entire market or from ETFs or from everything else. Obviously in my last few videos I've covered so many headlines and so many articles of large banks and the Fed saying how the market crash is almost a certainty at this point. And obviously these big banks and institutions are preparing for the almost certain recession by withdrawing money out of the stock market and converting to a larger cash holding. Yes, obviously the dollar will end up weakening over the coming weeks and the coming months, but it's better to hold on to a weakening dollar than it is to stay in stocks that could potentially crash by 70, 80 or 90%. And CNBC reported that hedge funds are selling tech shares at their fastest pace in a decade as rates spike. Surging bond yields have triggered hedge funds to sell growth-focused technology shares at a speed not seen in the past decade. The hedge fund community dumped tech stocks in the 4 sessions between December and early January as the interest rates spiked. And obviously that supports my hypothesis that even hedge funds are dumping stocks and converting to a more cash-based holding. And as a result, Gold Telegraph has tweeted saying breaking news. The cost to insure bonds of Goldman Sachs, Morgan Stanley and Citigroup, aka credit default swaps, against default hit 2-year highs on Monday. aka it's equally as expensive right now to take out credit default swap insurance on the largest banks as it was back in early March of 2020, just as the pandemic was announced. And even in terms of AMC, we're also seeing tons and tons of hedge funds reduce exposure on their put positions and buying tons and tons of calls. Obviously, in my video a few weeks ago, I spoke about a number of different hedge funds that had added tons of calls and sold off tons of puts. And today we've also seen Simplex Trading doing the exact same thing. Even Simplex Trading has sold off a whopping 218,000 put positions and purchased a giant 2.2 million call options as of their latest Q1 2022 filing. Simplex Trading, per their reported position, is now net long on AMC, holding way more call options than they are put options. This goes to show that even these large hedge funds and institutions are now changing face when it comes to AMC because they know the market is crashing and they know that AMC will squeeze. All of these large hedge funds and institutions are now trying to build a net long position on AMC so that when it does squeeze, they can make profit. Guys, be sure to let me know down in the comments below what you think about the massive Wall Street fraud crackdown and about all of these hedge funds and institutions secretly selling their stocks. And as always, guys, if you enjoyed this video, be sure to check out some of my others. Alternatively, subscribe to the channel and ding that notification bell, because that way you'll be alerted when I upload a new video. Cheers.